We're back in conversation with Dharan Jayasena of MK Global Financial Services, Amrish Malik of Edelweiss Financial Services, and Devin Choksi of KR Choksi Securities. Also joining us now, Amisha Vora of Joint MD, Prabhudas, Lilladher. Thanks so much for being with us, all of you. Amrish, just before we went into break, we were also talking about really now the strategy one should devise going ahead into markets. Of course, we've been very clearly seeing that cyclicals are the flavor of the moment. There's no doubting that, whether it's oil and gas, capital goods, etc. Going forward, would you stick to that kind of theme as well? What would you be doing with your...
Absolutely. I think that is a theme which will actually move up over the next couple of months, if not the next couple of years. But would I get in immediately? No. Because, like I've been saying, it is possibly time to book out to a certain extent. And if there's euphoria, I think that's possibly the time to stay out, take off for a while. Because I was buying when no one in the market was buying, way back in December, January. So now is the time for me to book out to a certain extent. I'll wait out for the euphoria to die down. Maybe once we see some correction, that is the time to get in again. And again, the themes will be similar. Capital goods, infra, the PSU space, where I see a very good move going ahead. So these are the 2 or 3 spaces which I look at. But at the same time, you cannot ignore pharma, IT, and FMCG, which again would be under some pressure over the next few months. Utilize that pressure to buy at lower levels.
All right. So that's as far as stock strategy is concerned in terms of stocks and sectors. Let's also welcome in Amisha Vora, Joint Managing Director for Prabhudas, Lilladher, who's joining in this conversation. Amisha, thanks for taking the time out today. We've been tracking the exit polls. We've been trying to analyze what it means for the market itself. What's your reading and what does it actually throw up in terms of a strategy here?
So I think that, the exit poll outcome is extremely favorable, no doubt about it. And probably this kind of a reality, if it turns into reality, it would mean that probably almost after 5 or 6 terms of, election, that we will get a decisive mandate at the center. And I think it can mean a lot. So I will not be the one who would be very much in a hurry to take very short-term view at this point of time. Rather, one should be little ready to bear with a little, corrective modes in the market or corrective phases in the market as and when they come, instead of really predicting it in a hurry and stay invested. A lot of retail HNI investors would have been waiting as markets are running little ahead of fundamentals as to when to enter. And I would say that they have to really start looking at markets from a slightly medium to long-term perspective, as a lot of change will happen, because the background of the economy is also equally important. Last 5 years, despite all the demographic potential that we had, we were underperforming as an economy hugely. So a turnaround, natural turnaround, was also probably possible when it get aided by very efficient decision making. I think there is a lot more to come, and one should stay invested.
Right. Amisha, so just to clarify though, to what extent do you see, or how much of a downside do you see in the immediate term, just to get a sense of the kind of risk you're tracking here?
Your voice is actually totally cracking and I couldn't hear your question. Can it be repeated?
Let me
in a
try
better voice, please?
Yeah, let me try once more. Just want to get a sense of the amount of downside that you see in the near term. Should there be any upsets? What is the kind of margin you've kept aside considering the downside?
So there are 2 ways to look at it. Assuming that all the exit polls are going totally wrong, and we still don't see Mr. Modi becoming a Prime Minister, then in that case, I certainly feel the market has big risk of almost 10% plus kind of a correction. How much is the probability of that? One needs to really take a call on that. That how much is the probability of this thing happening? But for that, if Mr. Modi is Prime Minister with even not 272, but say something around 250, 260 kind of seats, and taking little support from independents or other parties, I think the downside will still get restricted somewhere between 6,600, 700, and we may not go down all the way to 6,000, 6,300, which I still see is a possibility in case if Modi is not becoming a prime minister. And in case exit polls are turning out right, I think the potential for markets to go up in the short term may be just about 7,400 or so. But in the medium term, it will be difficult to put a number on the upside. But I would only say that one should remain invested.
All right. Since we are talking about the market outlook, in the meantime, while we were having this conversation, take a look at what's happened on the Nifty. 1.7% now, and you're talking for 120-point gain. Steadily, it's just moved higher to the highest point in terms of the intraday session so far. 7136, record highs once again in terms of the market is what we've seen as the last 2-day euphoria wasn't enough. Today also, you got that reaction, a thumbs up coming in to what we've seen in terms of exit polls. And take a look at some of these stocks. BHEL, 14.5% higher is what we've been seeing as far as trade today is concerned. Just trying to pull up L&T as well. Well, that one's up almost, 3 to 4% as far as L&T is concerned. And take a look at the level, 1434. This is the pre-split level that we're actually talking about. In July last year, stock had actually split. It was somewhere around a 1400, 1410 level, if I remember correctly. The stock had actually seen a little bit of a split. It's come back charging to those levels is what we've seen. And this pretty much is the conversation going forward from here as well, Devin. What's the allocation in terms of stocks, in terms of sectors, Devin? What should one be working with now with the market seeing this kind of a runaway rally?
Well, Priyank, I think the approach would pretty much continue with the same kind of a spirit. I think start looking at, the value propositions in the market in different businesses, different companies. And you would probably find, that some amount of re-rating, of course, is possible in many of the companies at the same time. But more importantly, I think the neglected valuations up till now, could possibly be given the first preference. Like you were mentioning about BHEL, I think the company's fundamental remains strong as always. And I think now with the kind of clarity emerging that the new government would start taking up some of the policy actions, I think companies like BHEL would probably start looking up for sure. So certainly, I think you will have to start looking at the businesses in individual basis. I would rather say that yes, this is a market wherein one would start assigning some amount of discount much ahead of time to the entire event happening. So to an extent, one will have to play with that kind of a thing and buy little bit expensive, if at all. I will have to put it across for the quality that you are buying. Now, where you would get that kind of a clarity and as well as the quality. In many of the PSUs, certainly they have remained neglected. So you would probably find the first preference. We have seen the upside in many of the oil PSUs to begin with, and now in the cap goods also we are seeing that kind of an upside coming up. Similarly, some of the banks could be in a preferred choice of list to add into the portfolio, and not to forget the cyclicals which are likely to probably start participating, including metals. So to a greater extent, one will have to look at them. And while you allocate this kind of money to some of these sectors where the potential is high, you also have to start looking at some of the neglected ones again, in the IT and the pharma. So to an extent, you'll have to allot some portion of the portfolio. When they get better down, one will have to buy them to get the immediate value. So overall market performance and investors' activity will have to be constantly aligned with the kind of a growth that we see in respect to businesses to get the gain in the portfolios.
Devin, thanks so much for joining us on the show. Great having you with us. We'll, of course, continue this conversation and also get sectoral strategies from Dhananjay and Amrish as well as Amisha when we come back after this very quick break. Do stay tuned. You're with us here on this very special edition of Political Capital.
Let's welcome our viewer from Pune, from Kolkata, Bangalore, Delhi, Chennai.
I have taken a voluntary retirement from foreign bank and I'm taking tuition.
Now you listen in to Monica. She is going to give you the tuition.
Speaker, it seems that you're a very high-risk investor.
Now that my wife
is coming, she's going to make things work now.
I have a question here to Monica.
She's made you a crorepati many times over. You still have a question. Shashi, I believe you're a principal.
Yes, Vivek, I think this is a dream come true. We can finally get and scold a principal.
Always remember, wealth cannot be earned, it can only be created.
Presented by
BSE Investors Protection Fund.
मेरा वोल्टास ऑल वेदर इजी ड्राई हीट हो या स्टिकी हीट it keeps you comfortable in any weather.
Murthy, brilliant. AC.
India's fastest currency derivatives exchange is here. BSE CDX, powered by Bolt Plus.
Election 2014 has shaped up as a genuine battle of ideas, amidst a real debate over the direction of the nation.
It's the economy election, a battle that will define India's economic future.
The votes are in and the stakes are high.
Join us on counting day for all the live action.
The final verdict and its impact.
Welcome back. You're with us here on Political Capital. We've just got a few minutes left to go, so very quickly, I just want to get closing comments from all of you. Dhananjay, you mentioned earlier that you do want to focus on specific sectors as well. Just very quickly, if you could just take us through your strategy going ahead, sector focused.
Yeah, so basically, as far as the banking sector is concerned, I think we are selective in the PSU space. Our topics has been the private sector banks. ICICI Bank has been a front runner over there, so I think that has been doing well. So HDFC Bank has been there. Within the PSU space, we were liking PNB and VOB in particular. So that is on the banking space side. As far as the auto space is concerned, we believe that Tata Motors is still a good stock. Within the domestic auto space, we like auto ancillary, and also two-wheelers. We like Hero Motors over there. As far as capital goods is concerned, we have been selective. We liked L&T, for instance, and in the mid-cap space, we liked Blue Star and Greaves Cotton. Those are very selective names. Cement is kind of neutral, but over there we liked Ambuja and Ultratech and Shree Cement. In consumer space, we would like to, there has been an underweight trade that had been playing out earlier with respect to Colgate. So we have been liking Colgate. So that is something that we like. We'll continue to hold. We have also been liking Asian Paints.
Now, let me also get Amrish into the conversation. Amrish, now, when we talk about the advice to investors out here, and as Dhananjay was mentioning a couple of the stocks that he's working with, but the fact is, as we speak, 7145 on the index, you're approaching